Hey, how's it going, everyone? Welcome back to Lunch of the Market. This is the penultimate day before options expiration. That's just a fancy word for the day before, the second to the last, right? The ultimate day, I guess, is the day before, and the penultimate day is or maybe the ultimate day is the day of, and the penultimate day is the day before. I don't know. Wikipedia it or dictionary.com it, but I'm pretty sure I just used that appropriately. Anyway, so we've got some issues on our hands. Akamai clearly isn't above 40. It's not even above 37. Yeah, it's not even above 37. So Akamai, we got to wave the white flag on, roll that sucker down and out to next month. We're really trying to get to the 35-30 put spread. In lots of cases, we're actually rolling to the 37-32 put spread. The stock's trading at around $36.58. It just got a nice upgrade the other day, that being today, I think. Sorry, the news cycle is insane right now, and it's options expiration tomorrow. And after the close, we've got to drive down to Florida for Invest Like a Monster, which is tomorrow. So join us in Orlando, Florida. If you're in Florida, if you're watching this, if you're even remotely close, if we can get there by tomorrow night, so can you. So Akamai is an issue. Molycorp is sitting at around $43.08 right now. We had some 43s were short. Those should be okay. 42s were short. 40s, those should definitely be okay. But we had a few 45, 40 put spreads that we had to kind of roll those suckers down and out. On Molycorp, the great news is we actually didn't even have to make the position size any bigger, and we could go out in the curve to, I have to take a look at the month to see what month we rolled out in the curve to. Didn't have to make the position size any bigger. Actually got paid to stay in the trade, right? In the Molycorp trade. So we're going to stick around for a while. Molycorp's been a position of ours for quite some time now. We've actually made really good money, but it's such a volatile stock that periodically you're going to see, days like today where you hit it on a bad day. Molycorp's earnings were good. And I'm sure that if I was smart enough to figure out how all the world is connected, right, that it's down off something from Japan, right? Because rare earths are used in electronic devices. Certainly, Japan is known for making a lot of electronic devices, although I would say China actually makes probably the majority of electronics. I mean, China actually makes Apple's iPod. So Molycorp, yeah, if you go up to September, you can actually get to the 40-35 put spread from the 45-40 and actually take in more money. That's not a bad trade. You got to stay in the trade longer, and that's right, the risk that you have to run. So right now we had a pretty big position that was short 45-40. It's now split up into the April 40-35, the June 42-37, and the September 40-35. Obviously, to get to April and get down $5, we had to increase the size of the position. It wasn't terrible, but it's going to be, a really nice size position for us by the end of the year when all these come off. And at this point, we're not trying to be a hero. We don't mind moving terribly far out on the curve. A stock name that's actually a Wall Street Bean top 20 stock, I believe still, is CSKI. That's China Sky One Medical. Their independent auditor is BDO, which is one of the top 5 accounting firms in the world. So we actually don't mind owning stock in CSKI now that it's been obliterated. You can pick the stock up for about $4 a share. Yeah, somewhere between $4.10 and $4.12. I just happened to notice there's only a couple things on the screen that's red that I'm looking at. One is my CSKI, which we did add to today. We actually doubled down on our position. I mean, at $400 a pop, we have the risk capital, kind of throw that out there and, see if it sticks. It's kind of like spaghetti, right? We cook it, we see if it sticks, and if we come back later and, it worked out, then we're good. If not, then we just have dried up spaghetti that we're going to throw out, which is basically what the stock will be worth if it doesn't work out. So that's a very speculative play, and literally, we don't care if it goes to zero. That's the risk capital that we have. So please, I've heard some comments from people this week asking about some trade repair on trades that they put on their own. We really love having you guys, and we love you following us on Twitter, and we're glad that you're friends with us on Facebook. All that's very exciting, but keep in mind that if we get you into it, well, then we'd probably usually try to get you out of it. If we didn't, then and you need personalized investment advice, we'd love you to become a client. That would just be terrific. But short of that, just kind of try to keep the questions stock specific, maybe level specific. What levels do you like? And our rule is always, you know, we want to get $1 for the spread when we sell a spread, unless we're doing trade repair. Then if we get any additional money, then we're usually pretty happy with trade repair. You know, the goal in trade repair is to watch your position size. Don't take a huge position just to get out of a trade and then have no firepower if that month goes wrong. You got to be prepared to be in a trade for several months. Selling put spreads, even though ideally you collect the money every 30 months, there's really not a big difference other than lower risk selling put spreads and being long a stock. You want the same thing. You want the stock to go up over time, and we're value investors, and so with the markets where they're at right now, we just feel more comfortable. Like John Nigerian said today on Fast Money Halftime, he likes the risk of selling spreads because it's defined reward and defined risk. So that's what we like about spreads. We know what our loss is when we put the trade on. We know what our gain is when we put the trade on. And the money gets credited into your account as soon as the order gets filled. I like that. Okay? And then you always have the option to roll. We rolled lots of stuff down and out today. Molycorp, Akamai. F5 is another one we kind of had to wave the white flag on. Stock didn't trade too well today. It traded up around 108, and we thought maybe we could hold it in tomorrow, see another bounce, and then the stock kind of turned the other way. So that's where we're at. F5 rolled down and out. Akamai rolled down and out. Molycorp rolled down and out just on the one position. The rest of the Molycorp, we were already short the 40.35. So we bought all those back, took them off. Fire should be okay. Decker should be okay tomorrow. Lululemon, even though it's down $3 today, you know, it's going to have to drop another 10% to get close to where we're short at 70. So Lulu should work out for us this expiration. U.S. Steel should work out for us this expiration. We're short the 52.5, 50 put spread that expires tomorrow. I think the stock's trading at around 54, 55. Yeah, it's trading around 54.89. We got $2, and they've only got 1 day to be right. Okay, so that's trade repair. Roll those things down and out. Don't be a hero. Don't get crazy. Watch your position size when you roll down and out. If you have to, a neat trick that will tell just you guys, if say we're short 10 spreads, I like to split it up, say roll 5 of them down and out to the next month, maybe up the position size to really try to get that thing off the book by next month. And then the other, you keep the same size and you just roll it somewhere out on the calendar. I like getting past the summer. I don't want to deal with seasonal weakness in the summer. And then that's how I get rid of the second half of the trade. Okay, so take it, say it's 5, right? Split it off 2 and 3. Roll 2 spreads way out on the curve and keep the same position size or even up the position size, and then get really down and out, and then, you know, triple the position size on the remaining 3 and really go after it. You know, like Akamai, we went from being short 40.35 to being short 35.30, right? And then you just pump up the position size, and you know, there looks like to be a lot of support for Akamai around that $35 level. Tried to break it this whole week, which obviously if you're going to break a stock, this was the week to do it. It couldn't do it, and so we're fairly confident, especially with the upgrade. And there's no shortage of people getting into streaming video. Okay, whether it's an iTunes model where you're going to pay per transaction, which is what Facebook's doing, or whether you're going to do a subscription service, which is what Netflix does and Amazon is trying to do. But Amazon, until they figure that out, until they figure out their identity, Amazon's still weak today. Even in a really nice tape, Amazon's weak today. So we have no position at all, nothing. We're not short spreads. We're not long anything. We don't have a call spread risk reversal. And Amazon, until they kind of figure out what their identity is going to be. Until then, Netflix has been a proven winner. It's certainly a volatile stock. You know, don't get in there if you get queasy from, you know, volatility or stock action. All right, thanks for joining us again today. If you have questions, always mention us on Twitter. Really, just try to make it stock specific and not your position specific. If you want to ask us what we're doing on one of the positions that you've been following on Lunch of the Market, by all means, ask us about what we're doing. We'll be totally open and honest with you. You don't get every trade that we do because, you know, people pay us good money to manage their money. And so, but you get a lot, and I hope it's really helpful. Thanks for tuning in again today. Happy St. Patrick's Day. Hope you have your green on, and we'll see you tomorrow. Go Cincinnati Bearcats and Florida State Seminoles in the NCAA basketball tournament.